Hello, class. Good evening. We got a late night class going on. Okay, this is for my night owls. Okay, this is for my people that like to work late at night, like to get work done, or you like to read up, study, gain some knowledge, gain some wisdom. All right, tonight you guys are gonna be the teachers. Okay, I'm gonna give you a scenario, and I want your full attention. I want your experiences, if you have any, on this scenario that we're going to go over. So, for everyone that's new here, welcome. God bless you. Hope you had a wonderful day today. I did a live stream earlier. Definitely catch that as well. All right. I want to welcome everyone. How you doing, Brad? Hello, Craig, Gonzalez, Katrina, Samuel, Big 74. How are you? I'm at work, so I'm getting paid to listen to you. Cool, cool. How you doing, Russell? Hello, Dimes and 20s, Mr. Rich. Again, love it, man. 2 shows in one day. You know it. Listen, I want to take you back, all right, and say, I want you to think if you could do it all over again, if you can go back to your 20s, right? And here's the scenario. You're working, you make money, you got a business going or you got your career going, you're saving money, you're doing velocity banking, getting your credit right, increasing cash flow, all that good stuff. If you can go back with all the information that you know now, plus velocity banking, how would you acquire your first real estate property? How would you move out of mom and dad's house? Okay. Here's the scenario. Here are my numbers. Here are girlfriend numbers. Okay. So couple right here. And the goal, here's my timeline. We've got a 1 to 3 year timeline to decide on what to do, whether to rent or to own. All right. And I just want to give you some solid numbers. All right. If I'm able to maintain this, obviously the goal is to keep increasing it, which I'm projecting to average about 10K a month for this whole entire year. If so, this would blow all my numbers out of the park. So I'm going very conservative. Expenses, I expect to remain somewhere level. Might go as high as 35, but I really highballed it here because I live at home right now. And then debt should be wiped out no later than May, latest. Cash flow, 2,500 bucks, and that's already lowballing it. And here's my current debt tool. All right, and here's girlfriend's numbers. 2K plus, expenses pretty low, cash flow 500 plus. Sometimes she does 1,000 if she's really good. Just good factors here. We've got our assets, 2 assets. She's got a policy, I got a policy. We're both putting in 500 bucks a month. Okay, so by the end of this year, our cash value together should be somewhere around 10K. Year one should be. All right. And here's the scoop. Girlfriend's in college. She's going to graduate. Okay. December from college this year. And then on to law school. So the situation is we've got 12 months to decide. All right. I got to do the work. I got to decide. All right. Is it better to convince girlfriend to live in an apartment where we rent together, Or can I convince her to own a property, or convince myself, for that matter, to own something? And then if that's the case, how should we do it? Because there's many different options, right? And then here are the numbers. Here are the projected numbers. Safely, me alone, I should have anywhere from 17 to 30K cash by the end of December. If I just kept cash flowing this, okay, and didn't waste my money. I should have somewhere around that money. For girlfriend, she should have anywhere from 10K to 12K. And this is not even counting cash that she already has on hand. This is between now and then. Safely, should be able to do that. And then credit capital, I personally should be able to acquire 40 to 70K, whether it be from lines of credit or credit cards, but I'm trying to shoot towards line of credit, increasing this thing to about 20, 25, 30K by the end of the year, and then maybe getting a second one. Who knows? All right. So based on that information, help me out here. What do you think would be wise for a 23-year-old? Okay, you're a couple, you're with someone you trust, and you're getting ready to, you're planning on moving out at some point in time. All right. Ideally, if I move, I want to be somewhere near a university. Obviously, it would be wise to move to whatever school that she gets into, law school wise. So, being in South Florida, let me get some opinions here. I'm going to look at some responses here so far. So let's see what we got. All right. Katrina, let's save questions outside of this scenario, just for this class. Promise to answer them on another live stream. All right. Russell says, how about rent to own? All right. So we're gonna write down different stuff. Rent to own. Listen, I want to get real detailed. So if you want, I'll take a call. I'll take a call for like 2 minutes, and then like give me detail, because I can always watch back myself and take notes. Okay, so we got rent to own. Craig says, buy a duplex, rent one, live in one, velocity, that baby. Okay, so duplex, live in one, rent the other. That's kind of what I was thinking myself. I was like, I can probably get a townhouse. I can get one of these townhouses, man, near a university, and freaking either Airbnb that thing every week, and I just live on the other side, do my thing. Okay, do my thing. All right, let's see. What else? Rich says, buy a 2-family, rent one, live in the other. All right, so that's same thing. Yes, that way you can get an FHA loan and put 3.5% down. So that's some good detail right there. 3.5% down. All right, by the way, guys, look, I don't know none of this stuff. So what you're giving me is so valuable. Okay, and then I'm going to do my homework. And, if I have anyone in the community that's a real estate investor, a real estate agent, a realtor, okay, you've got knowledge in the real estate game, help out your adopted son. Okay, get me right. I want you to come in my shoes as if you was in your young 20s again, and with all the information you know now. What would you do? Okay, the most effective way to do what? Leverage our money. Leverage this money, this cash, projected cash. How can we leverage that? All right. Adrian says, without the suffer, we wouldn't know the value of velocity. But yeah, man. Invest now, start early, don't wait. Yeah, I'm doing that already. Man, I'm doing a lot. Trust me. I don't go anywhere, I don't waste money, I do my thing. Matthew says, seller financing. Okay. You're gonna have to get into detail for me. I want some detailed stuff that I can look back on. Cruz says I would suggest you take advantage of first time home buyer program and have it pay off itself. Okay. Ned is also recommending you could do rent to own. This would leave your options open. Yeah, I really like the option. Uh, Man, it's like I don't know. Could do the duplex. Obviously, that's gonna cost more. Or you do like a little rent to own, whether it be in an apartment. Right? Maybe I could do a condo or just an apartment. What do you think? Andrew Hall says buy only if you do it on your own income in case you break up. Listen, if you don't know me by now, I'm a very consistent, loyal guy. So, when it comes to personal relationships, I do just as well of a job as committed I am to you. So I think I made the right move. Not think, I know. You know what I mean? You know when you know, you know. So, even though I'm young, listen, I got all my chips on black, solid, not changing. Let's see. Chapman, I would look at purchasing even a below market that you could renovate and have some equity. My man. So you're talking about investment property. I was assuming that would be my most economical route is obtaining a property probably by the end of this year, an investment property, potentially getting an investor on board to cover some of the other cost of getting the property with the ability to fix and flip it. And then would I be the buyer is my question. Would I be pretty much, I'm in on it in the beginning and then I'm also collecting it, and then the investor would get, a portion and boom, they're done. And then I remain with the property. Obviously, this is all going to get wrapped up in an LLC so that it's all legitimized and all that good stuff. So, I'm already got that arise in my head. Tony Love says buy 5-bedroom house, rent 4 to college students. I like the idea, but I like to be in my zone. So I don't know if I want to hang out with a bunch of college students smoking weed and playing video games till 3, 4 a.m. in the morning. I stay over my girlfriend's dorm, and these freaking kids never go to sleep, man. I don't know what it is. I don't know. I'm a 40-year-old stuck in a 23-year-old body, so I need my sleep. So if I'm going to be hanging out with 4 other college students that are always partying and all this stuff, and I'm not throwing my generation under the bus, but that's what we do because we're trying to have fun and all this stuff, right? And I'm sure you can agree that when you was in your 20s, you was doing the same thing. So, who we kidding? Who we kidding? Adrian says duplex in NYC? Question mark. I don't know, need location to answer. Oh, South Florida. South Florida, okay? I'm not going up to the cold. Done with the cold. No. South Florida. All right. Uh Particularly Miami or Broward is what I'm thinking about. All right, cruise. 3.5% down, and after living in it for a year, rent it out complete, buy another duplex on your girlfriend's name, 3.5%. Take it easy. I got a business to run. So I'm not exactly looking to replace my whole entire thing with real estate. I just want to have this cooking. I want to be cooking in the kitchen with this real estate, if you know what I mean. I don't want it to overtake what I'm doing here with you guys, right? Because this is where I'm meant to be. This is my thing right here. This is interaction, Q&A, velocity banking, helping people in the ground level, foundations, personal finances. So it would be pretty upsetting to my audience if I took off and became this real estate investor, and now you can't even talk to Denzel one-on-one because he's making too much bank in the real estate game. All right, let's see. If you rent to own, your landlord is ripping you a new one. That is how they get cash flow. Get your own cash flow. Own home or duplex is logical. Okay, Brad. Kind of like the controversy here. All right. You had me thinking rent to own was pretty cute, but you're talking about, landlord is gonna get a big gain on me in the beginning. All right, trying to be economical with the cash. Paul Campbell says rent cheap year one, stack more cash with the option of buying any good deals that might come up. So you're referring to just this part right here. I think this is the easy route. This is the obvious, which is just rent cheap, get a 1 bedroom, 1 bath, and battle it out until she graduates from law school and lands the career, which is like probably the cheapest route to go. Rent cheap, a 1 bedroom, 1 bath, freaking 1,200, 1,300 rent, and just cook. Just be cooking. Stack cash. Do the Uncle G program, right? Stack 100K before making any investment, right? Follows the 10x rule. Keep building the business. Stack the cash. Make more income. 10x my life. I get you. Chapman says you could fix and flip the first couple properties with an investor. Yeah, don't get ahead of ourselves, right? I just want to handle the beginning. All right, everyone talks about, become a real estate investor and flip a bunch of properties and all this stuff. Hey. Let's stick at the very, very foundation point of an individual's journey in the real estate game. I'm giving you my purpose behind this, okay? Which is I don't want to just do this full time, real estate investing, and that's all I do. Okay, I want it to be something it's in the kitchen, part of my tools. All right, it's like my best crock pot, so to speak. I pull it out when I want to make, a really good meal for the lady. All right, that's when I whip it out. Right, and then day to day, work in the business. All right, so work with me here. Let's see. Rich says I was married at 22. Whoa. Let's see. Matthew, seller financing allowed to leverage the seller's equity. Fix the property with your lines of credit. Okay. Get a 3-family rent out apartment and keep one for yourself. Live rent free and continue to save more money With velocity banking, your 3-family house. Bang. Okay. Ned says, that is not true. Rent to own is a great program. All right, I like the controversy. Hold on now. All right, don't confuse me now, because I got to look back at this when I'm reviewing. By the way, if you haven't already, smash the like button. What are you doing? All right, y'all got to support, man. Hit the like button. Playing games. Let a family member know that we're going back in time, and we're gonna do some real estate. All right, rent to own is a great way to use your velocity banking strategy. I believe so. Okay, rent to own usually means buy lawnmowers and do your own maintenance too. Okay. Yeah, I want to have minimal work. So here's the thing. I want minimal work. All right. I want to obtain something. My window is 1 to 3 years. That's the window to move out, right? That window provided by the lady, okay, not by me. If it was me, man, I'd probably still just live at home, probably. But we gotta, I'm trying to build something that will last forever, right? Brad says, find an architect that can formulate a reasonable floor plan for a couple with reasonable square footage that has modern technology in it so it sells in the next decade. Okay, are you referring to me like getting a lot, just a lot, empty lot, and then building a property off that empty lot? Is that what you're referring to? Rent to own almost never works in many circumstances. Why would you ever want to do it when you can repair your own credit and with a 620, 640 be prepared to buy your own home outright? Mind you, 20 something years old, millennials, we lose interest quickly, right? So I don't necessarily want to, what I should say, I don't necessarily want to put all my money in one property, right? I want to be able to leverage the thing. I want it to cash flow in the very beginning years, simultaneously live in it, and then get to the point where after the 3-year window is up, I can potentially move to the next property and continue to Airbnb that thing or rent it out. And then just let the rents, right? Let the rent payment or the Airbnb cash flow, whatever the case may be, let that pay the mortgage in a sense. Just let that pay the property off and I cash flow the difference. Meanwhile, I still got all my cashola, right? And I'm putting that in the next thing, all right? And then I'm thinking every 3 to 5 years, I can continue to acquire more and more property at the same time doing what I love to do, okay, which is this. I don't want to compromise this for other streams of income. I want them to be additions. I want this to be my main activity, my main flow, because I love to do it. Okay. Let's see. I like the interaction here. This is good. Taylor says, so you plan on getting asset protection? Question mark. Yes. Okay. My asset protection is velocity banking and the life insurance policies right here. Okay. These are the two things that I'm not going to lose money in. And then me acquiring a property, whether I do the rent to own strategy or get a duplex and learn about this 3.5% down, and then learning about FHA. I got to learn about that. So we got some, opportunity here. I like the idea of renting cheap. Obviously, this is the easiest route to go. You don't got to think about anything. You just rent the thing. But in a sense, I feel like my cash is going to die, month to month. When I have all this wealth of information, might as well try to acquire something that you can somehow cash flow in the mix, right? So I am leaning towards minimum duplex, okay, or getting a little something bigger like a tri or a quad, and really create some volume here. Who knows? All right, let's see. Rent to own definitely works. Just become the owner, landlord instead. Then sell it to people who are not in this channel that don't know how to manage credit and keep their deposit and sell it again and again. I don't know if I like that. I don't know what you're trying to say. Hey Denzel, I forgot there are ways to use the income from the property as your own income while purchasing the property. Okay, you might have to elaborate that a little bit. I am a little confused. If you don't believe rent to own works, check out my YouTube videos. I have the proof. Whoa, Ned, you got a YouTube channel? We can do some collaboration together. I'm doing exactly what you stated with an Airbnb property right now. Okay, so we've got some solidness here. Ned, if you want to jump on a call with me, 5 minutes, and explain yourself in detail? Would you be down for that? Because I know I got your number. I'll call you right now. All right, let me know. Samuel says, apply for on-site apartment manager. You can either get a huge discount or rent free, depending on company. I pay $980 for a nice 3-bed, 2-bath in Southern California. Rate for some apartments go for $1,700. Okay. BuzzB21 says quad is less risk. Yeah, so my friend Matthew, I'm going to read what he says because he's someone that does the Grant Cardone strategy, uses none of his own money to acquire real estate. And he says, okay, so you have options available to you as a first-time home buyer, whether it be a house, condo, or fourplex. He recommends a fourplex. You have a conventional loan, 20% down, FHA, which is 3.5% down, but comes with PMI, right? You also need to research local assistance programs. Some states offer down payment assistance, closing cost assistance, tax credits. There's also another way which involves doing a contract for deed, which is a little more advanced, but you can get into an owner finance property with a 2-year balloon. No down payment, no credit, no bank needed until the end of the 2 years, and then you simply refinance. The advantage there is during those 2 years, you get to collect cash flow, which Denzel likes, while also taking full advantage of the tax benefits, which is what Denzel likes. Okay, cool. The only disadvantage is that you're not paying down your mortgage for 2 years, which might offset the fact that I just made all that cash flow. So I got to think that through. Also, there is a HSA home warranty program that most of the time you can get the seller to pay for the first year. That way, if anything goes wrong, blah, 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 you got your costs. All right. So Ned says I can give her a call. All right, let's make this interactive. right? Let's make this interactive. This will be our first call, Ned. Pretty cool. Let's see what you have to say. Hello, hello.
Ned says I can give her a call.
Hello, Ned. Can you hear me?
Let's make this interactive.
Hello.
Hey, I'm here.
All right. So do me a favor and mute me. Call dropped here. Let's see. Hold on. Come on now, don't waste my time. I don't got a lot of time.
Yeah, I can hear you.
All right, Ned, go ahead and mute me on your laptop. All right, because I can hear myself. All right, so tell me, what are you thinking strategy-wise with the numbers that I placed on the board? What are you thinking? Speak up, by the way. Ned. Come on. Don't waste my time. All right, you're wasting my time, man. Listen, let me call Matt. Let me call my guy Matt. My guy. I think Ned's wasting my damn time. I don't like my time being wasted.
Hello?
Hey, Matt, how are you?
Hey, not bad. How are you, Denzel?
All right, doing well. Listen, we got about 50 people in the room. Everyone's giving their 2 cents, giving their feedback. I just read your text message to the audience, and with my numbers on the board, so you see them, see what I'm working with. What are you thinking for a 23-year-old, got a girlfriend, we want to move into somewhere together. What do you think's the best strategy if you were my age again with all the knowledge that you know, plus velocity banking? What do you think is the best route? All right, and I'm not gonna try to debate it. I just want to hear it thoroughly through.
Yeah. What I would do, especially with how young you are, you guys don't have kids, right?
No kids.
Even better. So without kids, you guys have a lot more flexibility. So I would, which, knowing you probably don't even have a single family in your mind, which is good. What I ended up doing was fourplexes. Reason being is because, and I believe you're much like myself, very analytical. You'll want to crunch the numbers on every deal and find the best one. So you can find a high cash flow property where, say you do an FHA and you do 3.5% down. You move into that property, you're living in one of the units. Well, you're still making money on some of these properties, even though you're living in one. A year later, you can move out, buy another property if you're set up and you do things the way I did. Buy another property the next year, move out, rent that unit. Now you're making even more cash. And the reason I like fourplexes over duplexes, I've seen some people were mentioning condos, is if you have somebody move out, you're still making money on most fourplexes. If you have 2 people move out, like on my building, 2 people move out, I'm breaking even. They're just paying the bills. So it's a lot less risk. The chances of you having 3 people out at once is very, very low, especially if you stagger your leases, and I can help you with all of this in the future. But a cool thing about this is what a lot of people don't realize with real estate is there are a ton of loopholes. And I love loopholes. And so, I get into that later, but what's really cool is you can use the cash flow from the property. So say you're looking at a fourplex, and it cash flows $1,500. Well, you can use that $1,500 that property is going to make as if you were making an extra $1,500 right now. And the way you do that is if you've had a year's landlord experience, or, and here's the little loophole, if you have a friend or your parents or somebody that has, that will sign a little document saying that they will show you the ropes, which you have a ton of friends here. So you can have somebody sign off saying they are going to teach you how to be a landlord, how to manage your property, and now you've just got access to that property's cash flow before you even buy it.
Okay. So sign off, you become the landlord.
Yep.
In a sense.
So basically, like, for instance, you would go, hey, I'm looking at purchasing this property. My debt to income's off, whatever, because maybe it's a little more expensive of a property, but that property cash flow is high. I've got my friend Matt here, who's been a landlord for, 4 or 5 years. He's going to show me the ropes. He's going to, walk me through everything and help me manage it for the first year so I can gain that experience. Boom. Now you can get that property's cash flow as your own to qualify.
Okay. In terms of the legalities behind it, do you wrap this in an LLC? What's the tax structure that is like best fit for this type of thing?
Absolutely an LLC.
Okay.
And the reason is, as long as you don't ever commit any kind of fraud,
right.
Somebody isn't going to be able to pierce that corporate veil and come after you personally. And what I've done is I have an LLC per property because I want that protection. I don't want anyone, if something happens, they sue me. I don't want them to be able to access all my other property and all of my businesses, So absolutely have an LLC. Absolutely imperative.
Okay. Perfect. Yeah, because I got a lot of clients that they don't have LLCs. They just buy the property themselves with their own money, and I was like, it's the
that's a lot of risk.
You're right. So I want to avoid that, especially at such a young age. Especially putting myself out there on the internet. You never know. People have bad intentions, So I want to make sure I'm protecting myself. All right, so I like that. I like that a lot. Now, in terms of cash, me finding the deal, finding a fourplex, right? Is this a matter of, I just got to expand my network in South Florida and just find people, or is this something that, not only that you could probably be a part of, but this community also, engaging in? How do you find the fourplex? Do you recommend finding an investment fourplex or something that's already done that's going to cash flow? For your very first property.
So it kind of depends on where you want to look at things. There's 2 ways you can look at it. You can look at it as if you're going to take advantage of those first-time home buyer programs like an FHA,
Gotcha.
Community assistance on that type of deal. And of course, you can look anywhere from online to getting a realtor to help you get the deals, even if you're not going to use a realtor. Because the other strategy, and you have to weigh out the pros and cons, is you could also do what I was saying about the contract for deeds. So essentially, you can talk to, or I can help you negotiate with the seller of the property, and you negotiate with them so that you can take over those mortgage payments. And so it won't actually be you paying. You're going to be paying that person their mortgage payments while you get to collect some or all cash flow for those 2 years. And in the eyes of the IRS, you are quote unquote the owner. So you are taking all of your deductions, you get all of those credits. And so now you've essentially purchased a property without having a down payment. So now you have time to fix your credit. You have time to raise your debt to income. You have time to raise your cash flow, expand your business, whatever it is. So at the end of those 2 years, then you can go and get a bank refinance, and now you're done. You never had to pay a down payment at all. So that's another thing you can do.
Right. So the end result would be the cash out refi. Get out of that. What if I'd be living it, get out of it, cash out refi, get the money, flip it, and then be done with it in a sense, and on to the next one.
Yeah, yeah, you can do that. Or I mean, there's so many options.
I know.
Keep crowded about this.
I know. I'm just thinking the most. I want to think of the most simplest route where a college student in law school can do her thing, and then an entrepreneur can do his thing, right, and not have the stress of trying to figure out the very best strategy. More so, just trying to figure out what's the most convenient, effective route that it's going to make me happy. It's not going to stress me out, and I know that no matter what, throughout the whole process, I am minimizing risk throughout the whole process, minimizing risk.
Yep.
Yeah,
I would go fourplex.
Fourplex, live in one unit.
Whatever strategy you use.
Right, fourplex, live in one unit, find the deal, possibly do the contract for deed or the realtor route.
Yep.
Make sure it's an LLC.
Yes.
Don't commit any fraud. Protect yourself. Get the corporate veil. Protecting yourself. Learn some loopholes, some advantages for tax advantages, things like that. And we go from there. So you figure by the end of 2019, right, going into the new year 2020, based on business revenue and cash on hand, will also solidify my position yet again. So, all right, my friend, I like that. Thank you for your time again. Thanks for your input. You're speaking to a whole community. God knows how many people that you just helped just now, kind of get an idea, what they could do for themselves while we're all doing velocity banking.
Definitely.
Yeah.
It's very powerful.
All right, my friend. Thank you. You have a good night. And I'm going to answer some more questions here. All right. Bye.
Definitely. Bye.
How'd you like that? All right. How'd you like that? Let me read some comments here. Jody says, just know when it's time to buy, some mortgage lenders will grant you the down payment or pay your closing costs, one or the other, to save you a lot of upfront costs. Okay. Let's see. Taylor, that's not Asset Protection LLC, S Corp, etc. Okay. Yeah, I know what you. Okay, now I know what you're talking about. Like making sure I flow it through an LLC. Yeah, I already knew that. Let's see. Greg, buy a fourplex, live in one, rent three. Yep. So it looks like majority of the community right now is between the fourplex strategy, right, or the rent to own strategy. All right, we got Ned and his group saying, yo, rent to own. And we just had that exclusive phone call right there talking about fourplex, which is like a bigger game, not too crazy. The only, thing to worry about is the collection of rents from those three people, whether to hire a property manager to take care of all that. Because remember, I don't want to have extra stress about the property itself. I just want to be able to live somewhere, create cash flow from it, pay for it, have it have a long-term effect of cash flow gain, building my real estate portfolio at the same time, while also being able to focus on me as an entrepreneur and have girlfriend continue to focus on her becoming a lawyer, right? No distractions, focusing on our thing and get where we want to get to. All right. Chapman says, I purchased my first home in my 20s for $63,000. Well, that's nice. That's no longer available for millennials like me. Sold it in less than 10 years for $169,000 after $30K in renovations and renting it out for several years. Not bad. Pretty good. If you use, like Grant Cardone says, more doors, the better. And yeah, you're right. You are right. Because we're letting the numbers kind of just do the work for us in a sense. So, just like what Matt was saying, someone moves out, boom, you still got two rents coming in. Not bad at all. Okay, if you live in a rural area, you can get a USDA loan, which is zero money down. Property tax is a lot lower than any type of concrete jungle. Velocitize that thing, and you will have more cash flow for life. Okay. When you first move in with your love, it should be about you two. Make it special. Well, yeah, I already know that. I love the quad idea. Yep. I think quad might win here. I don't know. I wish Ned would have answered me. So we'll try to work that out again. Maybe Ned will talk at a later time. I don't know what was going on there with the reception. I don't know. You tell me. This income is really good. I think with these income numbers that if they stay reasonably, they should be fine. Maybe lay off expenses a bit through. I think I'm pretty reasonable with my expenses right now, man. I'm running a business, remember. So a lot of that 3,000 is to run this, to do this, buy equipment, to keep investing, to one day hire someone to help me out with the amount of volume. I got a lot of people, waiting in line, so to speak, for me to talk to them exclusively one-on-one. Brethren Ken says, do the fourplex is a great idea, you and your girl, but why don't you divide it? You live in one fourplex, she's living the other fourplex. Y'all can go back and forth to see each other. I don't know, brethren. I think I'd rather just see her every day. If I wanted to see her when I wanted to, then it would just be best to just keep living separately right now and just keep building our cash. But the whole idea is to, unite. So I don't know if I want to do that. And like I said, I don't want to add too much stress. Just want to get one thing going, be happy, be in my zone, and do my thing. Right? Let's see. Brad. This caller is on point as well. Yeah, man, come on. I work with the best. LLC is good, or you can up the insurance to 2 to 3 million. Yeah, you're right. Taylor says subject to. Yeah, I've heard about that strategy. Cruz, FHA can be strict as well. If property needs work, it would have to be a 203,000. Okay. Let's see. Muhammad, if this is your first and you don't have 20% down, go the FHA way and take it from there. Make sure it's a duplex or a triplex if you can find one. Okay, Muhammad, cool. I'm sure based on the numbers, Muhammad, I'll have 20% down. That the 20% down thing is probably not going to be the issue, right? It's whether or not I actually want to use 20% of my cash when I could maybe have that flow in another direction, right? But at the end of the day, real estate is the end game in terms of making a ton of money. So I probably wouldn't mind using the whole 20%, if that's the case, and just continue to live a lifestyle that's a 50% lifestyle. So living 50% on whatever I make, right? And I have this ability to save as much as 40% of my cash flow, right? And then another 10 to 20% of that can be used to keep flowing the business, making it more money, and just keep, doing it that way. Okay, if you flow it through your LLC, you can't use your personal line of credit. It puts your personal accounts and assets at risk. Okay, there's a way to get around that, my friend. I can do an owner infusion in a sense. Okay. Remember this. I can pull the line of credit out and put it where? In the business account. Can I do that? Of course I can, right? And then my income, when it goes into my checking account, I can then bleed the business, so to speak, and pay my line of credit, my personal line of credit, and then do it again. I don't know. Am I onto something? I could do that. Big says definitely a fourplex. Yeah. I think if I don't do the fourplex strategy, if I don't do that, then I would probably cancel out all other strategies and just go with rent cheap, stay under the radar, so to speak, keep building my business, let girlfriend go to school, do her thing, drive to and from an easy commute to school and back, something simple, easy, stress-free type of environment. I don't think that's bad at all. Um, and instead of renting, could make it like a lease payment with the ability to buy out the property, at some point in time. And that might be kind of cool to do. All right, great info on the call. Thanks to both of you. Yeah, I thought it was really cool. Keep in mind, guys, that this will be his first. Yes, I want you to keep that in mind. Don't go all crazy on me in terms of real estate strategy. Don't go all crazy on me. I wanna be simple, right? I wanna be like real quick, real stress-free type. All right, Muhammad. Let's see. Hire a property manager. Yeah, I will most likely include that in the cost, and it just makes sense to have a realtor on your team, a real estate agent, or a broker, a real estate attorney, an escrow, a title person, just a nice team built up where I can call them up. Like, hey, take care of this. I don't know what to do. Take care of it. Okay, let's see. I can manage a fourplex along with two other multifamily and work a full-time job. Okay, so I'm starting to get some feedback here that it's not that stressful to manage such a thing. And I think you're probably on the right track because I don't personally know. Okay. But I would probably agree with you right there and probably say, yeah, it's probably not that difficult to manage such a thing and have that thing, work for us. Even Honey is saying it's not that hard to manage. My dad did while working in a different country. So, okay. Okay. I'll let you handle the paperwork, honey. Okay. Let's see. Damien, definitely get property management so you won't like the 2 a.m. calls, speaking from experience. Yeah. I'll definitely get a property manager without a doubt. So if there's any property managers in this community, hey, I'm here. Reach out to me. Let me know what your business is about. Okay. Because this channel is going to keep progressing. Okay. We're not just going to talk about velocity banking, right? There's only so many videos that I can do on velocity banking, right? On just that one topic. So my goal is to really create an archive of information on just that one topic. And then we expand, right? Covering the infinite banking concept. And then we expand and talking about estate planning, putting together a team of individuals, talking about real estate, all different, like just keep expanding it, right? And then bringing on like really, really cool individuals with 20, 30, 40 plus years of experience in different, you know, different areas of real estate, like an attorney, like a lawyer that writes all the contracts and the deeds. Like how cool would it be to, to like do a Q&A, with a lawyer and ask all the questions that we don't want to even know about, but we want to make sure they're set, that we're safe. That'd be cool. All right, Paul says, where is she going to law school after December? All right. Well, we don't know yet. She's got to take the LSAT. And we'll figure that out. Fourplex LLC manager, live in it for a year. If you need to move, leave it on autopilot. That is a great summary, Paul. I like that. I'm going to steer toward this fourplex. Now, all I got to do is find the deal, right? So let's talk a couple more minutes on how do we find the deal, right? How do you actually find the property, right? I mean, there are so many courses out there that, talks about it. I'm part of a community called Renatus that is like a real estate educational like schooling system that talks about how to find deals. But what I've noticed is they focus more on single family properties. Okay. So for finding a deal on a fourplex, there might be some different routes, so to speak. So for everyone that has had a fourplex, that has owned, a fourplex in your lifetime, tell me, how did you find the property? And did you go with an investment property at first, or did you just find something that was ready to go and just cash flow right away? Tell me your thoughts on that. Muhammad said, just make sure you get good tenants. LOL. Yeah, I'm gonna try to find normal people in this unnormal time that we live in. Taylor says, Grant Cardone says, love the 2 a.m. calls because on the first, they're going to pay. More problems, more opportunity. That's funny. Okay, Damien says, don't rule out Section 8 tenants. The money is always on time. Interesting. Video text says, yeah, they have a Section 8. Brad says, you are going to be just fine, my friend. Protect yourself. Be smart. It's no harder than running cameras and lights at 11 o'clock on a YouTube channel. You are good with numbers. Make sure you buy low, sell high. Thanks, Brad. Like that. I would like to get a nice condo down in Florida when I don't have to work anymore and have cash flow over $10K a month with $200,000 to $300,000 lines of credit. I'm tired of the cold weather. I feel you. I'm from up north, so we came down and we were like, all right, we ain't never leaving. Florida's where it's at. All you got to deal with the hurricanes, and so far in the past 10 years they haven't been that bad. Okay, I would like to, let's see. Muhammad says networking and good realtors. Yep. Hi, my line of credit is $76,000 with income of $7K a month. Average expense $2K. My question is, how do I use my line of credit to increase my saving? Hey, ready? Here's my income. Here's my expenses. Here's my cash flow. This is my line of credit. I take my line of credit money and I fund my life insurance asset, right? Goes into this tax-free asset. Okay, that's very important. If you design this thing properly, it'll be tax-free, right? You can earn anywhere from 4 to 6.5% or higher. Okay, tax-free. That's if you want to go the savings route. And if 4 to 6.5% doesn't excite you, you can go with a hybrid of a whole life strategy and an IUL strategy. You kind of get a hybrid going where you have no risk from the market without any additional cost of an IUL policy would normally have, with the benefits of the guarantees that whole life provides with the participating dividends. Okay, and you can earn anywhere from as high as 12.5% or lower, right? 12.5 being the highest, with the guarantee of 4%. So if the S&P doesn't perform one year, you don't get the 12.5, but you remain with the 4%, between 4 and 6%, which is not bad at all. So that's how I am personally using my line of credit to continue to increase my savings. I take a chunk, I dump it into the policy, I do velocity banking to pay it off. And I pay no interest in the process. Barely, I cut off this cost completely. Completely. I pay nickels and dimes, dollars and cents, okay, on a monthly basis. The most that I've had on a 15.99%. That's a lot. I'll pay anywhere from 20 to as high as $50 interest per month. I mean, that's nothing. That's nothing, right? That's a couple of Starbucks coffees per week. You know, it's peanuts, right? So that's how I am personally creating my, building my savings, so to speak. So I don't just have cash sitting. I never want to have cash sitting. I always want to keep this thing flowing. Whenever I have cash in my checking account and my savings account, I'm like, all right, how can I move this thing, right? Well, who can I partner up with? Who can I invest with? Who can help me grow this channel more? Where can I, improve my quality? What equipment can I buy to improve this? There's so many things. Okay, so I hope that helps. Zidon. Let's see. Yeah, man, I'm not about that Section 8. I'm kind of iffy about it, so I don't know. I don't know about Section 8. I really don't have all the details on it. I don't think Grant Cardone does Section 8, so I'm gonna kind of stick with what my unc does long term and see how that goes. Okay, the lazies are home all day, every day on Section 8 with no hobbies and bored out of their minds and complain about everything. Damien, I respect all the options on Section 8, but I can only speak of my experience. I've had a Section 8 tenant for 2 years and has been very good. Not all Section 8 tenants are bad. Just saying. I agree with you. I agree with you. Okay. I hear the government is going to be downgrading Section 8 payments with this federal shutdown. See? Good to be aware of what's going on in the economy, right? Like we talked about earlier. Velocity banking in the current state of the economy. It's good to pay a little attention to the news. Don't get sucked into the garbage, but just get the main points and on your way. Denzel, when you were talking to Matt, he said you shouldn't be considering a single family. Personally, like my own space, private yard, etc. Even if I went back in time, I would keep my personal life separate. All right. Yeah, mind you, right now at 23 years old, I could care less about the backyard, the pool, and the things like that. I mean, I could care less because the Lord has me in a direction where I'm not going to be planted in one area. Like, I know that God's going to have me traveling state to state, possibly even country to country, talking about personal finances. Okay. Just made a connection recently with a couple of school teachers that they're all about education reform. Imagine if personal finance became an actual core, like right next to math and science and history, right? What if your five major classes in middle school and elementary, you had your math, your science, your English, your history, your biology, and then you had personal finance, like a whole separate class, not included with math, personal finance. And what if in those textbooks, velocity banking had its whole section, or credit, debt, leverage, real estate, banking, insurance? I mean, just imagine how more advanced this country would get, how more knowledgeable would we become if we were able to just reform and reignite our education system. I mean, your kids, my kids, would be so advanced, man. We'd be so ahead. We'd beat all the countries. America would be number one again. Okay? So let's see. Brad says, talk to your treasurer as well. There are benefits and grants out there too. Okay, cool. Noted. He can upgrade to his own single family later in life. Yes, Paul. This is just the first steps. Thank you, Paul. I'm on that. First steps, man. First steps. Baby steps. James Jackson, if you grab a duplex, you'll increase your ability to get a more valuable property with the rent income coming in. That was my first move when I was 23. Looking for looking forward to talk in the morning, Jim. Okay, duplex it is, Mr. Jackson. Yep. All right. So to sum things up, fourplex is probably number one. Duplex is probably like number two or three. The rent to own strategy, probably number three or two. And then the fourth is rent somewhere cheap, keep stacking cash, put all the extra cash into the business, live somewhere cheap for a couple years, wait till she graduates law, build up our cash so much we can do the other strategy, get the big home, the backyard, the pool, and live the American dream, so to speak, right? So not bad. All right. Well, it's been an hour. Okay. Thanks for hanging out. Appreciate your support. Listen, I'd like you to like this video, share it, post it, review. I'd love for some of my people that my loyal Patreons, people that are supporting this channel financially, love for you to give your feedback on my Facebook page called Velocity Banking. All right. And for anyone that's new, okay, you've been watching me for some time now, and you like to work with me one-on-one, I'm pretty simple. I talk about velocity banking, infinite banking, and your kingdom authority. Three main topics that I cover. Any of those things interest you, we're always talking about how to pay off debt, increase cash flow, lower expenses, and raise your credit, all using your own income so that we can leave a legacy behind for our kids and build wealth in our living years and when we pass away. All right. And to close out the night, Mr. Damien just gave. All right. So I appreciate that. I appreciate when you give. Understand that when you give, you receive tenfold every single time. That is a universal fact. It's written in scripture. You can't get around it. All right. So, I get a lot of people that reach out to me and ask me a ton of questions. And I'm like, hey, man, what can you give? Right? You want to work with me? What can you give? I'm transparent. What talents do you have? Can you, maybe it's not always financial, right? I have a client, right, that literally created my whole entire brand, these shirts and designs and whatnot, free, no charge. Sent me a bunch of shirts. That was so invaluable, right? That was so valuable, right? That helps me build my brand even further and reach more people, right? So it's like, hey, what can you teach me? Maybe you got a consulting business on real estate, on, estate planning, right? Maybe I can pick your brain. Maybe you're a trademark attorney. Maybe you're this. And maybe you could just feed knowledge to me and I feed you back knowledge. That's a great exchange right there. Or maybe if you have a YouTube channel or you have a following on Facebook and we do some collaborative work together. So many things that we can do. All right. So thank you guys for tuning in. More live streams, consistent, more examples coming your way. And yeah, stay tuned.